Today we are going to discuss a very important topic that can change the way small income earners manage their money. The topic is trading versus saving. What's better for a small income? If you earn a small income, this decision can have a huge impact on your life. Many people with low income often feel confused about what to do. Saving feels safe, but it grows your money slowly over time. Trading seems risky, but it has the potential for faster growth. A lot of people think just saving money is enough. Some others jump into trading and quickly lose their money because they are not prepared. In this video, we will discuss the pros and cons of both approaches. We will also learn how to create a smart balance between saving and trading. I will guide you in simple language so you can understand every concept. You don't need any technical knowledge to start following these steps. Every small income earner can benefit from the strategies we discuss here. We will go step by step to compare saving and trading. We will look at the benefits of saving and its limitations. Then we will explore the benefits of trading and the risks involved. Finally, we will determine what is truly best for small income earners. It's important to understand the basic definitions first. Saving simply means setting aside money for future needs. Trading means putting your money into markets to grow it, accepting some risk along the way. Both approaches work, but they require different mindsets and methods. Small income earners must understand both before making a decision. Saving helps you during emergencies and unexpected expenses. Trading gives you a chance to grow your wealth faster. However, trading without knowledge is more like gambling than investing. That is why this video focuses on safe and smart approaches. We will guide you on how to start step by step with minimal risk. First, it is crucial to have a strong saving foundation. Then you can begin trading small amounts to build your skills. Many people focus only on quick profits. This is often their biggest mistake. A smart approach minimizes risk while still allowing growth. Small income earners face a major challenge: limited capital. The goal is to make the best use of the limited money you have. Balancing saving and trading is the key. If you only save, your growth will be slow. If you only trade, the risk is too high and could lead to losses. The best approach is to combine both strategies effectively. Small steps can create big changes over time. Even small savings combined with controlled trading can make a strong financial impact. Many people fear trading because they see it as too risky. Risk only becomes dangerous when there is no strategy or plan. Controlling risk is the most important rule in trading. Saving shows discipline and consistency. Trading tests your patience and emotional control. Both skills are useful in real life, not just in finance. Once you master discipline, the path to wealth becomes smoother. In this video, we will also discuss practical examples of saving and trading. These examples are realistic for people earning a small income. You will see how to start without putting yourself in unnecessary danger. First, we will look at the role of saving. Then, we will explore the role of trading. Finally, we will combine both to create a complete strategy. This video will serve as a complete guide for small income earners. Many people believe myths about saving and investing. For example, some say, if you earn little, you can't invest. This is completely false. With smart planning, even a small income can grow significantly. This can be achieved with a combination of saving and trading. But planning and knowledge are essential. Making decisions based on emotions almost always leads to losses. Following a strategy is crucial to success. We will also discuss common mistakes people make and how to avoid them to protect your money. The goal of this video is to make you feel empowered and confident. Once you feel empowered, controlling risk becomes much easier. We will go step by step, breaking down every action you need to take. The tips provided will be simple and actionable. All you need to do is follow them consistently. Earning a small income does not mean you are stuck financially. It simply means you need to use your opportunities wisely. Both saving and trading can support your financial growth. However, the right balance is key to achieving real results. Only saving will keep your money safe, but wealth growth will be slow. Only trading can lead to high risk without a safety net. Combining both can create a strong and secure financial foundation. Every small income earner should understand this principle. Consistency and discipline increase the chances of success dramatically. By the end of this video, you will be able to make a clear decision. You will know where to start and how to allocate your money wisely. Every step will be practical and easy to apply. There are no complicated formulas or advanced financial theory here. The aim is to prepare you to take action confidently. Even small actions repeated consistently produce big results over time. Now, we are ready to move to the next part. In part 2, we will explore the concept of saving in detail. We will discuss the mindset, benefits, and limitations of saving. Trading will be explored in the following parts. Each section will include practical examples that you can relate to. By the end of this series, you will have a complete roadmap. You will understand how to grow your wealth step by step. You will know exactly what to do as a small income earner. You will also understand what mistakes to avoid and why. We are starting this journey with clear and simple steps. Everything is designed to be easy to follow and implement. This is the perfect foundation for anyone wanting to improve their financial situation. Saving is the foundation of financial stability for anyone with a small income. Many people underestimate the power of consistent saving over time. Even small amounts saved regularly can grow into a significant sum. The first step is understanding that saving is not just putting money aside. Saving is a disciplined habit that protects you from financial emergencies. When you earn a small income, every rupee counts, so saving becomes essential. Without a saving habit, even minor emergencies can become major problems. Saving gives you peace of mind and a sense of security. It allows you to handle unexpected expenses without stress. When you start saving, you start thinking about your financial future. It changes your mindset from short-term to long-term planning. Even saving a tiny portion of your income consistently matters. You don't need to wait until you earn more to start saving. The earlier you start, the more benefit you get from time. Saving also teaches discipline and patience. It helps you control impulsive spending and prioritize essentials. Many people think saving is boring, but it is actually empowering. It allows you to plan for goals like education, medical needs, or small investments. Saving also creates a backup for financial stability. It ensures that you are not entirely dependent on others during emergencies. A strong saving habit also gives you confidence to explore opportunities. When you know you have a safety net, you can take calculated risks safely. Without savings, trading or investing can become extremely risky. Saving helps you understand the value of money and planning. It also teaches you patience because results take time. Unlike trading, which can be fast, saving grows slowly but steadily. Slow growth is not a disadvantage if your goal is long-term security. Saving ensures that you never compromise on essentials due to lack of funds. Small income earners should treat saving as a non-negotiable habit. Decide on a fixed percentage of income to save every month. Even 10% is enough to start with. Consistency matters more than the amount you save. Save first, spend later. This simple principle changes your financial life. Many people save only what is left after spending. This approach rarely works and leads to ineffective saving. Instead, pay yourself first by setting aside savings immediately. Automatic transfers or separate saving accounts make this easier. Having a dedicated saving account prevents accidental spending. This small change creates financial discipline naturally. Setting clear goals for your savings helps you stay motivated. Goals can be emergencies, education, or future investments. Tracking your savings monthly ensures you remain accountable. Even small amounts should be celebrated as progress. Saving also protects you from debt and high-interest loans. If an emergency arises, you can cover it without borrowing. Debt-free life is easier to manage and reduces stress significantly. Many small income earners fail because they ignore saving altogether. Saving also reduces financial anxiety and uncertainty. You start thinking strategically about money instead of reacting emotionally. Long-term saving builds wealth gradually through compounding. Even a small amount saved regularly can double or triple over time. Patience is key to seeing these results. Saving teaches financial responsibility early in life. It also helps you distinguish between wants and needs. People who save regularly often spend less on unnecessary items. Saving creates freedom to make better decisions in the future. It allows you to plan your career, education, or small business without stress. Many people ignore saving because results are not immediate. Slow growth is actually a strength because it is stable and predictable. A small emergency fund can prevent a financial crisis. Even saving $5 or a small portion of your salary weekly can build a strong buffer. Saving also prepares you for larger financial opportunities later. When you have cash ready, you can invest in trading or business safely. Savings act as a foundation for any future financial strategy. Without a foundation, even the best trading strategy can fail. Small income earners should view saving as the first step toward wealth. It is not just money, it is a mindset shift toward responsibility. Saving creates discipline that benefits all areas of life. It encourages planning and thoughtful decision-making. People who save regularly feel empowered and in control. They do not panic when unexpected expenses occur. Saving prevents stress and financial mistakes that come from desperation. It also allows you to take advantage of opportunities without worry. Many people feel saving is boring compared to trading, but safety matters more. Trading without savings is like walking a tightrope without a net. Savings give you the courage to explore calculated risks later. Your saving habit will slowly increase your wealth, even if you earn little. Consistency and patience are more important than the size of income. Even small income can build substantial savings with discipline. Save before you spend, and spend within limits. Track your progress and adjust your saving plan monthly. The feeling of seeing your savings grow is motivating and addictive. Saving also creates a habit of long-term thinking. This habit is necessary for wealth building and financial independence. When emergencies happen, your savings act as a shield. You can handle unexpected expenses without fear. Many small income earners fail financially because they skip this step. Saving ensures stability, security, and peace of mind. It gives you freedom to take small calculated risks safely. Saving teaches patience, discipline, and responsibility. It is the first step to creating financial freedom. Even a few dollars saved consistently every week can create a strong foundation. Saving may not seem exciting, but it is powerful in the long run. Small income earners who save consistently are always ahead of those who don't. A disciplined saving habit makes trading or investing much safer and more effective. Once saving is mastered, you are ready for the next step, controlled trading. Trading is a tool that can help small income earners grow their money faster. It is different from saving because it involves risk and opportunity. Many people see trading as gambling, but it is actually skill-based when done correctly. The first rule of trading is to never risk money you cannot afford to lose. Trading is not a shortcut to instant wealth. It is a method to grow money intelligently. Small income earners can trade, but they must start small. Starting with a small amount reduces the risk of losing essential funds. Trading teaches patience because not every trade is profitable immediately. Discipline is key in trading. Emotional decisions lead to losses. Many beginners make the mistake of trading with hope instead of strategy. Trading requires planning, research, and understanding of the market. There are many types of trading: stocks, forex, crypto, commodities, and more. Choosing the right type of trading depends on your knowledge and risk tolerance. Learning the basics is the first step before investing real money. Paper trading or simulated trading is a good way to practice without risk. It helps you understand market patterns and build confidence. Small income earners should focus on learning before expecting profits. The biggest advantage of trading is the potential for faster growth compared to saving. However, this comes with higher risk, which must be managed carefully. Risk management is the most important skill in trading. Setting stop-loss limits prevents large losses and protects your capital. Never trade impulsively based on rumors or tips from strangers. Trading requires patience, discipline, and a clear plan. Emotions like fear and greed can destroy a trading account quickly. Always have a strategy and stick to it consistently. Even professional traders lose sometimes. It is part of the process. Accepting small losses is better than risking everything for a big win. Trading also teaches decision-making skills that apply to real life. Small income earners benefit the most when they control their risks. A small, consistent gain over time can compound into significant wealth. Never risk all your savings in trading. Keep your emergency funds separate. Allocate only a small percentage of your income to trading initially. Many successful traders recommend 5 to 20% of your disposable income. Starting small helps you learn without emotional stress. Trading also builds confidence as you learn to analyze and make decisions. Understanding market trends is crucial for consistent profits. Technical analysis and fundamental analysis are two main methods to evaluate markets. Technical analysis focuses on price charts, patterns, and indicators. Fundamental analysis focuses on the financial health of companies and economies. Small income earners should start with simple strategies and gradually move to advanced methods. Learning from mistakes is a natural part of trading growth. Never let losses affect your self-confidence. Keep a trading journal to track every trade and its outcome. A trading journal helps you identify mistakes and improve strategies. Successful traders always review their trades regularly. Trading also teaches patience because not every opportunity is profitable. Waiting for the right trade is better than forcing trades unnecessarily. Small income earners must avoid high-risk shortcuts like margin trading initially. High leverage can amplify profits but also increases the risk of losing everything. Start with low-risk trades and increase exposure as skills improve. Consistency is more important than making huge profits in one trade. Focus on learning and building skills first, profits will follow naturally. Trading also requires continuous learning because markets constantly change. Stay updated with news and economic trends that affect your trading. Many traders fail because they ignore ongoing education and market research. Small income earners should also control their expectations. Trading is not a way to get rich overnight. It is a long-term skill. Small profits compound into significant gains over time. Never trade based on emotions like fear, greed, or impatience. Use tools like stop-loss orders and limit orders to manage trades efficiently. Trading can also improve your analytical and critical thinking skills. You learn to make decisions under uncertainty and pressure. Small income earners who master trading habits develop a strong financial mindset. Always have a plan before entering a trade. Know your entry and exit points, risk level, and profit target. Avoid chasing trades that don't fit your plan. Market volatility can be intimidating, but proper preparation reduces fear. Trading also teaches resilience because losses are part of the process. Learning from mistakes is more valuable than winning every trade. Start with simple strategies and gradually experiment with advanced ones. Trading is not about winning every time, but about making consistent, small gains. Small income earners should never rely solely on trading for financial security. Trading should complement savings, not replace them. By combining savings with trading, you create both security and growth potential. Always keep your financial foundation strong before taking trading risks. Trading also encourages strategic thinking, which is useful beyond finance. Small income earners who trade successfully develop patience, discipline, and focus. Never follow random tips or social media hype blindly. Success in trading comes from study, practice, and controlled execution. Trading also teaches the importance of risk-to-reward ratios in decision-making. Small gains consistently over time outperform occasional big wins with big losses. Always prioritize preserving capital over chasing profits. Trading with limited capital teaches humility and careful planning. Avoid overtrading because more trades mean more risk exposure. Controlled, disciplined trading is far more effective than risky, impulsive trading. Trading should be a skill, not a gamble. Even small income earners can become skilled traders with proper learning and practice. Always combine trading with saving for the best long-term results. Small, consistent steps lead to sustainable growth in trading. Part 4 will discuss the benefits of saving and trading combined for small income earners. Trading feels exciting because it promises fast growth. Saving feels safe because it protects what you already have. Both paths seem opposite, but they serve different purposes. When you earn a small income, the balance matters even more. Some people rush into trading hoping for instant profit. Others avoid trading completely because they fear losses. Both extremes can create problems. Trading without knowledge becomes gambling. Saving without growth becomes financial stagnation. A small income needs careful decision-making. You can't afford big mistakes. You also can't afford to miss big opportunities. That's why understanding both sides matters. Trading gives you the chance to grow faster. Saving gives you the security to survive bad times. You need both ambition and protection. One supports your long-term stability. The other supports your long-term growth. If you ignore growth, inflation attacks your money. If you ignore safety, losses attack your confidence. People with small incomes can feel trapped. But the trap breaks when you learn strategy. A smart approach begins with discipline. You must control your spending. You must control your emotions. You must control your decisions. Emotion is the biggest enemy in trading. Delay is the biggest enemy in saving. A small income doesn't limit your power. It only limits your options if you stay unaware. Knowledge opens new doors. Planning opens better futures. Consistency turns small money into strong results. You don't need to be rich to start. You need to be consistent to grow. Trading requires understanding risk. Saving requires understanding patience. Risk without patience is dangerous. Patience without growth is slow. When you learn both skills, you become financially balanced. Small money can grow in trading with proper risk management. Small money can build security through disciplined saving. Growth and safety become your tools. Confidence becomes your fuel. Every decision becomes smarter over time. Your mindset becomes sharper with experience. People often underestimate what small income can achieve. But small steps repeated consistently create big results. Your income doesn't control your future. Your choices do. Choose growth when opportunities appear. Choose safety when markets feel uncertain. Choose knowledge every day. The more you learn, the less you fear. Fear disappears when understanding grows. Understanding grows when you practice. Practice makes your strategy stronger. Strong strategy protects you from emotional mistakes. Emotional mistakes cost more than money. They cost time. They cost confidence. They slow your journey. That's why discipline matters more than luck. Luck can disappear anytime. Skill stays with you forever. Your skill becomes your advantage. Your discipline becomes your shield. Your plan becomes your roadmap. Your progress becomes your motivation. Every small win counts. Every small improvement builds momentum. Every smart decision pushes you forward. You don't need a perfect start. You just need a consistent one. Start with knowledge. Build with patience. Grow with confidence. Protect with saving. Expand with trading. Balance both sides wisely. Your future depends on your strategy. Your strategy depends on your mindset. A powerful mindset creates powerful results, and powerful results start from small steps. Begin today with clarity. Move forward with purpose. Your small income can become your strongest foundation. Most people believe money problems come from low income, but many money problems come from low planning. A small income becomes powerful when managed wisely. Without management, even a high income can collapse. This is why mindset matters more than salary. Your financial mindset shapes every result. A strong mindset helps you see opportunities. A weak mindset makes you fear every move. People with small incomes often underestimate their potential, but potential rises when you take control. Control begins with awareness. Awareness helps you identify mistakes. Mistakes teach lessons when you pay attention. Every mistake becomes valuable when it guides improvement. Improvement is the secret behind every financial journey. Nothing changes unless your habits change. Habits determine your long-term success. Good habits build stability. Bad habits destroy progress quietly. Small income earners must protect their progress. Every decision matters more for them. A single mistake can delay growth. A single smart choice can accelerate it. Saving becomes your first layer of protection. Trading becomes your second layer of opportunity. When both layers work together, growth becomes stable. Stability gives you confidence to take calculated risks. Calculated risks create faster progress. Progress keeps you motivated. Motivation helps you stay consistent. Consistency turns small actions into big outcomes. People who succeed don't rely on luck. They rely on systems that work. A system brings structure to your journey. Structure keeps you on track. Staying on track is difficult without clarity. Clarity comes from defined goals. Define what you want from your money. Define what you want from your future. Clear goals make every choice easier. Easier choices reduce stress. Low stress improves decision-making. Good decisions reduce losses. Reduced losses increase confidence. Confidence increases smart risk-taking. Smart risk-taking leads to better results. Better results inspire deeper learning. Learning keeps your mind sharp. A sharp mind recognizes opportunities faster. Quick recognition helps you act at the right time. Timing is a powerful skill in trading. Timing also matters in saving. Save early, grow early. Trade early, learn early. Learning early prevents costly mistakes later. Mistakes are unavoidable, but they can be minimized. Minimized mistakes protect your progress. Protection is important when income is small. Small income requires smart allocation. Allocate money with purpose, not emotion. Emotion leads to impulsive actions. Impulsive actions destroy accounts. Discipline prevents emotional decisions. Discipline builds a strong financial identity. Your identity shapes your habits. Your habits shape your outcomes. Small income doesn't limit you, lack of discipline does. Discipline allows consistent saving. Discipline allows controlled trading. Controlled trading minimizes risk. Minimized risk keeps you active longer. Longevity is the real advantage in the market. The longer you stay, the more you learn. The more you learn, the better you perform. Performance improves when you understand patterns. Patterns appear when you observe carefully. Careful observation turns chaos into clarity. Clarity makes trading feel less stressful. Low stress helps you stay stable emotionally. Emotional stability is a superpower in finance. People who control emotions control outcomes. Outcomes improve when decisions are rational. Rational decisions come from knowledge. Knowledge comes from study and experience. Study without practice is incomplete. Practice without discipline is dangerous. Combine all three and you build real financial strength. That strength helps you grow even with a small income. Many people believe trading is only for the rich. But trading is actually a skill that anyone can learn. A small income doesn't block your learning ability. It only tests your discipline. Discipline becomes your strongest weapon in the market. Without discipline, even big capital disappears quickly. With discipline, even small capital grows steadily. Growth happens when you focus on the process. The process matters more than the profit. Profit is the result of consistent process. A strong process begins with proper education. Education saves you from unnecessary losses. Losses become teachers when you study them. Every loss contains a message. Every message guides your improvement. Improvement requires honesty with yourself. You must admit your mistakes before correcting them. Some traders deny their errors and repeat them. Others accept their errors and rise above them. Your mindset decides which side you fall on. A strong mindset gives you clarity. Clarity helps you take confident decisions. Confident decisions reduce hesitation. Reduced hesitation improves your timing. Good timing helps you catch better opportunities. Opportunities appear daily in financial markets. But only the prepared mind can recognize them. Preparation is the difference between luck and skill. Skilled traders don't chase the market. They wait patiently for the right setup. Patience protects you from unnecessary trades. Unnecessary trades increase emotional stress. Emotional stress leads to impulsive actions. Impulsive actions lead to losses. Losses without learning become dangerous. But losses with learning become progress. Progress happens slowly at first. Slow progress builds deep foundation. A deep foundation creates long-term success. Success in trading comes from small habits. These habits include planning your trades. Planning includes knowing your entry. Planning includes knowing your exit. Planning includes managing your risk. Risk management is crucial for small income traders. It keeps you alive in the market. Survival is the first priority. Growth is the second priority. You cannot grow if you don't survive. This is why risk per trade must stay small. Small risk prevents emotional panic. Panic destroys rational thinking. Rational thinking builds consistent results. Consistency transforms your entire financial path. A small income can't stop a consistent person. Consistency turns weakness into strength. Strength gives you confidence during uncertain markets. Uncertainty is natural in trading. No one can predict the market perfectly. But you can protect yourself with rules. Rules guide your decisions when emotions rise. Emotions rise when results fluctuate. Results fluctuate because markets are unpredictable. Unpredictability doesn't matter when you follow your plan. A strong plan becomes your anchor. An anchor keeps you stable during storms. Stability is important for your mental health. A healthy mind makes better financial choices. Choices backed by knowledge create better outcomes. Outcomes show your level of growth. Growth proves your dedication. Dedication separates winners from quitters. Quitters stop when challenges appear. Winners push through challenges. Challenges train your patience. Patience improves your long-term performance. Long-term performance matters more than daily results. Daily results can mislead you emotionally. Long-term results show the real picture. The real picture becomes clear with time. Time rewards disciplined traders. Time exposes careless traders. Your goal is to become disciplined, not perfect. Perfection is impossible, but progress is achievable. Progress builds your future step by step. Your small income can turn into strong wealth through progress. Many people fear starting their financial journey. They worry that small income won't take them far. But the journey begins with belief, not money. Belief gives you the courage to take the first step. The first step opens the door to learning. Learning opens the door to opportunity. Opportunity opens the door to growth. Growth happens when you stay consistent. Consistency is the difference between dreams and results. Results appear when effort becomes routine. Routine builds discipline over time. Discipline makes your decisions stronger. Strong decisions shape your financial future. Your future depends on the habits you build today. Build habits that support your goals. Goals become powerful when you stay committed. Commitment keeps you moving during difficult times. Difficult times are part of the journey. They are not signs to quit. They are signs to grow. Growth requires patience. Patience helps you stay calm in tough situations. Calmness protects you from emotional decisions. Emotional decisions often create regret. Regret slows your progress. Progress increases when you think logically. Logic becomes sharper with knowledge. Knowledge becomes deeper with practice. Practice makes every concept clearer. Clarity helps you avoid unnecessary risks. Avoiding risks is important when income is small. Small income requires smart planning. Smart planning guides your financial choices. Choices determine your long-term stability. Stability gives you confidence. Confidence pushes you to explore opportunities. Opportunities expand when you take action. Action matters more than ideas. Ideas are useless without implementation. Implementation requires courage. Courage grows when you trust yourself. Self-trust is built through small achievements. Every achievement boosts your motivation. Motivation helps you stay focused on your goals. Focus prevents distractions. Distractions waste time and energy. Time and energy must be protected. Protecting them helps you stay aligned with your plan. A solid plan keeps you organized. Organization reduces financial stress. Less stress means clearer decisions. Clear decisions lead to better outcomes. Better outcomes improve your confidence. Confidence encourages long-term thinking. Long-term thinking is essential for real growth. Short-term thinking creates unnecessary pressure. Pressure leads to rushed choices. Rushed choices often lead to losses. Losses hurt more when income is small. That's why protecting your money is important. Protection starts with saving. Saving builds your financial cushion. A cushion gives you safety during emergencies. Safety helps you take calculated risks. Calculated risks help you grow through trading. Trading without pressure becomes more effective. Effective traders follow rules strictly. Rules save you from emotional mistakes. Mistakes are normal but must be controlled. Controlled mistakes teach valuable lessons. Lessons learned early prevent future losses. Future losses decrease when discipline increases. Discipline makes you a responsible trader. Responsibility builds trust in your own process. Your process becomes smoother with time. Time turns experience into wisdom. Wisdom helps you avoid repeating the same errors. Avoiding errors accelerates your progress. Progress proves that small income is not a barrier. The barrier is usually lack of planning. Proper planning makes your money work for you. Money grows when guided by strategy. A good strategy includes saving and trading. Combining both creates powerful balance. Balance keeps you financially stable. Stability gives you the strength to move forward. Moving forward consistently builds wealth. Your journey continues one smart choice at a time. Many people misunderstand the purpose of money. Money is not just for spending. Money is a tool for building your future. Your future becomes brighter when you use money wisely. Wise decisions come from financial awareness. Awareness helps you understand where your money goes. Understanding your spending habits is the first step to control. Control protects your income from unnecessary losses. Unnecessary losses slow down your financial progress. Progress becomes faster when you track your money. Tracking creates accountability. Accountability improves discipline. Discipline strengthens your financial habits. Strong habits create long-term stability. Stability gives you confidence to explore new options. New options bring new opportunities. Opportunities can change your life when used correctly. Correct decisions come from preparation. Preparation helps you avoid costly mistakes. Mistakes become valuable when you learn from them. Learning transforms your weaknesses into strengths. Strength builds resilience in your financial journey. Resilience keeps you moving during tough moments. Tough moments teach you the importance of patience. Patience guides your long-term success. Success grows when you stop rushing. Rushing leads to emotional choices. Emotional choices damage your financial stability. Stability requires calm planning. Planning helps you move with purpose. Purpose gives direction to your goals. Goals become powerful when you write them clearly. Clear goals help you avoid distractions. Distractions take you away from progress. Progress is the reward for consistent effort. Effort becomes meaningful when it aligns with your vision. Vision gives you a reason to keep going. Going forward is more important than being perfect. Perfection slows you down. Improvement pushes you forward. Forward movement builds momentum. Momentum makes your financial journey easier. Easy steps repeated daily create big results. Results reflect your habits and discipline. Discipline helps you save even when income is small. Saving builds your financial foundation. A strong foundation supports your future plans. Future plans give you motivation to stay focused. Focus keeps you on your path. Your path becomes clearer as you learn more about money. Learning helps you make smart trading decisions. Trading becomes safer when backed by knowledge. Knowledge reduces risk. Reduced risk increases confidence. Confidence helps you stay calm during market moves. Market moves can be fast and unpredictable. Unpredictable situations require strong emotional control. Emotional control separates good traders from impulsive ones. Impulsive traders struggle to survive long-term. Long-term survival is the real goal in trading. Survival allows you to gain experience slowly. Experience teaches you what charts cannot. Charts show patterns, but experience shows meaning. Meaning guides your decisions better than guesses. Guessing in trading is dangerous. Danger increases when you trade without a plan. A plan gives you structure. Structure helps you manage your risk wisely. Wise risk management protects your small income. Protection keeps you active in the market longer. The longer you stay, the more you grow. Growth requires both saving and trading. Saving protects your capital. Trading multiplies your capital. Multiplication happens with time and patience. Patience helps you stay consistent even when results are slow. Slow results are still progress. Progress is more important than perfection. Your financial journey improves with every small step. Every step brings you closer to stability. Stability gives you freedom to plan bigger goals. Bigger goals require bigger discipline. Discipline transforms your small income into growing wealth. Your wealth grows when your mindset grows. A strong mindset makes every financial challenge easier. Many people want financial freedom but don't know where to start. Starting becomes easier when you understand your priorities. Priorities help you decide what truly matters. What matters most is building a stable financial base. A stable base protects you from unexpected challenges. Challenges become easier to face when you are prepared. Preparation removes fear from financial decisions. Fear disappears as your confidence grows. Confidence grows with every step you take. Each step teaches you something valuable. Learning from each step builds long-term wisdom. Wisdom helps you avoid common financial traps. Traps appear when you act without understanding. Understanding requires consistent learning. Consistent learning sharpens your mindset. A sharp mindset creates stronger decisions. Stronger decisions reduce emotional mistakes. Emotional mistakes are costly in both saving and trading. Both require calm thinking and strategy. Strategy helps you see opportunities clearly. Clear vision helps you follow your plan. Following your plan builds discipline. Discipline separates successful people from inconsistent ones. Inconsistency weakens your financial progress. Progress strengthens when you commit to daily improvement. Daily improvement becomes a powerful habit. Habits shape your financial identity. A strong financial identity protects you from bad choices. Bad choices often come from impatience. Impatience pushes you into unnecessary risks. Unnecessary risks damage your confidence. Damaged confidence affects your long-term performance. Performance improves when you stay emotionally stable. Stability is a key element of financial success. Success demands patience and dedication. Dedication keeps you moving even when results are slow. Slow results are normal in financial growth. Growth is not always fast, but it is always possible. Possibility becomes reality when you take action. Action transforms ideas into progress. Progress motivates you to continue. Continuing is easier when you believe in your vision. Your vision guides your financial journey. A strong journey requires smart planning. Smart planning includes saving regularly. Saving strengthens your safety net. A safety net protects you during emergencies. Emergencies test your financial readiness. Readiness gives you confidence to handle difficult moments. Difficult moments teach you resilience. Resilience makes you stronger for future challenges. Challenges help you grow if you face them wisely. Facing challenges wisely requires knowledge. Knowledge helps you make informed decisions. Informed decisions reduce stress. Reduced stress improves your clarity. Clarity improves your trading performance. Trading performance grows when you follow your rules. Rules keep you disciplined in uncertain markets. Uncertain markets require emotional control. Emotional control keeps you calm during volatility. Volatility creates opportunity for prepared traders. Prepared traders act with confidence, not fear. Fear leads to rushed actions. Rushed actions damage your financial strategy. A strong strategy keeps you focused on long-term goals. Long-term goals require consistent effort. Effort becomes meaningful when it aligns with your purpose. Your purpose gives you direction. Direction keeps you from wandering aimlessly. Aimless decisions often cause financial trouble. Trouble is reduced when you stay organized. Organization helps you maintain discipline. Discipline makes both saving and trading easier. Saving gives you protection. Trading gives you possibility. Both together create financial balance. Balance leads to long-term stability. Stability builds the foundation for financial freedom. Freedom becomes achievable when your mindset is strong. A strong mindset creates strong results. Your results reflect your dedication. Your dedication shapes your future. Your future depends on the choices you make today. Make choices that support your goals. Make choices that strengthen your growth. Make choices that bring you closer to financial freedom. Many people underestimate the power of small improvements. Small improvements create big change over time. Time becomes your ally when you stay consistent. Consistency turns average habits into powerful results. Results become predictable when your strategy is clear. A clear strategy removes confusion from your decisions. Confusion disappears as your knowledge grows. Knowledge gives you confidence to take smart risks. Smart risks help you grow faster in trading. Growing fast means nothing without stability. Stability comes from saving regularly. Saving creates a strong foundation for your journey. A strong foundation allows you to handle challenges. Challenges test your emotional strength. Emotional strength determines how you respond to losses. Losses are part of the process, not the end. The end only comes when you stop learning. Learning keeps you moving forward. Forward movement builds momentum. Momentum makes your goals feel more achievable. Achievable goals keep you motivated. Motivation helps you stay disciplined. Discipline protects you from impulsive decisions. Impulsive decisions often lead to unnecessary losses. Losses feel heavier when income is small. That is why you must protect every rupee carefully. Careful decisions reduce financial stress. Reduced stress improves your mindset. A strong mindset keeps you focused. Focus helps you avoid distractions. Distractions can pull you away from your goals. Your goals matter more than temporary feelings. Temporary feelings often distort reality. Reality becomes clearer when you analyze your actions. Analysis shows you what needs improvement. Improvement happens when you adjust your strategies. Strategies evolve as you learn more about markets. Markets constantly change, and so must you. Change becomes easier when you accept uncertainty. Uncertainty is part of every financial journey. Embracing uncertainty builds confidence. Confidence helps you act with clarity. Clarity improves the quality of your decisions. Quality decisions produce consistent progress. Progress builds your belief in the process. The process becomes easier with practice. Practice deepens your understanding of risk. Understanding risk helps you avoid big mistakes. Mistakes teach you what not to do. Knowing what not to do is just as important as knowing what to do. Both sides of knowledge protect your capital. Capital must be protected before it can grow. Growing capital requires patience. Patience separates successful traders from emotional traders. Emotional traders struggle to stay consistent. Consistency gives you long-term advantages. Long-term advantages appear when you think beyond today. Thinking ahead helps you plan for the future. A planned future feels more secure. Security gives you peace of mind. Peace of mind makes financial decisions easier. Easy decisions keep you moving forward. Forward movement reduces fear. Reduced fear increases your ability to take calculated risks. Calculated risks help you grow your money. Money grows when guided by discipline. Discipline shapes your financial habits. Financial habits determine your long-term success. Success is not a one-time event. Success is something you build daily. Daily actions shape your financial identity. Your identity influences your lifestyle choices. Lifestyle choices affect your savings. Savings give you strength during hard times. Hard times reveal the importance of preparation. Preparation keeps you steady during uncertainty. Steadiness is a rare skill in financial markets. Skilled traders stay calm under pressure. Calm minds make rational decisions. Rational decisions bring better outcomes. Better outcomes motivate you to continue growing. Growing financially requires both saving and trading. Trading expands your money. Saving protects your money. Both together create a balanced and powerful future. Your future depends on the discipline you practice today. Your income may be small, but your vision doesn't have to be. A small income can still create a big future if you use it with discipline. People often think they need a high salary before they start growing money. The truth is that growth begins with habits, not income. Saving even a tiny amount trains your mind for financial control. Trading even with a small budget trains your mind for financial strategy. Both skills combined turn you into a stronger wealth builder. You don't need millions to learn how money works. You need consistency and patience. Money grows slowly first, then suddenly. But you must stay long enough to reach that suddenly moment. Small income does not limit your potential. It only challenges you to be more creative. Creativity is more powerful than cash. Because creativity finds opportunities where others see problems. Trading gives you exposure to markets and opportunities worldwide. Savings give you protection and stability. Together, they balance your financial journey. You should never rely on one source of growth. You should build layers of strength around your money. Every rupee saved is a small shield for your future. Every smart trade is a small step forward. Your journey may look slow, but progress is progress. Small steps walked daily beat big steps taken rarely. Even when your income is limited, your learning can be unlimited. You can study markets for free. You can learn risk management without spending money. You can watch charts and understand patterns without investing. Knowledge is the cheapest investment with the highest return. The more you study, the less you fear. The less you fear, the more you grow. Small income should never stop you from becoming financially educated. Education builds confidence. Confidence builds action. Action builds wealth. Most people delay their journey because they compare themselves to others. Comparison destroys motivation. Focus on your lane. Focus on your progress. Focus on your improvement. If you can improve by just 1% every day, you win. 1% seems small, but it compounds massively. Small improvements create big transformations. If you can save 10 rupees today, save them. If you can learn one new trading concept, learn it. If you can avoid one unnecessary expense, avoid it. These tiny decisions shape your financial destiny. Your future self will thank you for every small effort you make today. No effort is wasted. No learning is useless. No discipline goes unrewarded. Your small income is just a starting point, not your identity. Your habits define your future, not your salary. If you commit to growth, your income will eventually catch up. The market rewards consistency. Life rewards patience. Success rewards discipline. Never underestimate the power of starting small. Every big investor once started small. Every successful trader once traded with fear. Every disciplined saver once struggled to save. Growth is a journey, not a switch. You don't need to rush. You just need to stay committed. Small income teaches you resilience. Small income teaches you discipline. Small income teaches you appreciation. People with big incomes sometimes fail because they overspend. But people who learn with small incomes become masters of money because they learn how to manage every rupee. If you can manage small money wisely, you can manage big money easily. Your mindset is your greatest financial asset. Build it with care, strengthen it with knowledge, protect it with discipline, feed it with patience. Your journey will be slow, but slow is steady and steady is strong. Trading plus saving is your formula for long-term success. One gives you opportunity, the other gives you safety. Together they build wealth at any income level. You are not behind, you are just starting. And starting is the most powerful step of all. Your time is coming, your growth is coming. Your financial breakthrough is coming. Stay focused, stay patient, stay disciplined. Your small income today can become your success story tomorrow. This is the final part of your message, and it brings everything together. Your journey with a small income is not a limitation but a foundation. Foundations are always built slowly, carefully, and strongly. A weak foundation collapses, but a strong one survives storms. You are building a life that can survive storms. Saving gives you protection from the unexpected. Trading gives you opportunity for the extraordinary. Both skills are powerful when used wisely. Your income may be small, but your mindset is growing. A growing mindset will always lead to growing money. You have learned the value of patience. You have learned the strength of discipline. You have learned the importance of planning. You have learned the art of controlling emotions. These are the qualities that build financial success. Money is just a reflection of your habits. Build the right habits and money will follow. Saving teaches you consistency. Trading teaches you intelligence. Both skills shape your financial personality. Your personality becomes your power. The world rewards people who manage money wisely. The market rewards people who make decisions calmly. Life rewards people who stay committed to their goals. You have chosen a path that leads to a better future. A path that many ignore because it requires effort. But you are not afraid of effort. You are not afraid of slow beginnings. You are not afraid of learning. You are committed to progress, no matter how small. Small progress is still progress. Big results come from small actions repeated consistently. Even saving a little creates a habit of stability. Even trading with a small amount creates a habit of growth. Your mind becomes sharper, your decisions become stronger. Your confidence becomes deeper. Confidence is the real wealth that supports every future decision. A confident mind is a powerful mind. A disciplined mind is an unstoppable force. This final part reminds you that your journey is unique. You don't have to match anyone's income. You don't have to match anyone's speed. You don't have to follow anyone's lifestyle. Your only competition is who you were yesterday. Improve a little every day and victory becomes automatic. Your income will grow as your habits grow. Your wealth will expand as your mindset expands. Your life will transform as your actions transform. This journey is not about fast results. It is about lasting results. Quick money disappears fast. Disciplined money grows forever. Savings build the base. Trading builds the tower. Together they build your financial future. You are learning both, and that is your advantage. Most people learn only one. Few people master both. But you are becoming part of the few who rise, the few who grow. The few who stay strong even with small income. Small income is not a weakness. It is training. Training that builds character and resilience. When your income increases, you will already know how to manage it. You won't waste it. You won't panic. You won't lose control. You will invest it wisely. You will save it consistently. You will grow it steadily. This is the mindset that creates long-term success. This is the mindset that builds future wealth. This is the mindset that turns dreams into reality. Your journey is your power. Your habits are your strength. Your discipline is your weapon. Your patience is your advantage. This is not the end of your growth. This is the beginning of a stronger chapter. Your small income today will become your success story tomorrow. And your story will inspire many others to start their own journey.